Hey everyone, and welcome to Priv8, where we plug in and explore the intersection of privacy, human rights, technology, and democracy. I'm your host, Derek Silva. Today we're speaking with Avichal Garg. Avichal Garg is a managing partner at Electric Capital. He is a serial entrepreneur and technology executive. Avichal has sold 2 companies, and before founding Electric Capital, he was director of product at Facebook, which acquired his company, Spool, in 2012. Avichal, thanks for taking the time to be here today.
Thanks for having me. Good to see you, man.
You too. So why don't we start at maybe not the beginning, but what you're up to right now. What is Electric Capital?
Yeah, we are a venture firm that invests in the crypto and blockchain space. We invest in tokens and companies, kind of up and down the stack. We're a little different from traditional venture in that we also write all of our own software. So,
Hmm.
to do things like manage yield or even basic stuff, like how do you do your taxes? As anybody who's been in the space knows, it's not easy. And so we end up actually, we're all former engineers, so we end up writing a lot of our own code to sort of manage all this stuff. So we're sort of like a cross between a venture firm and a startup in a lot of ways.
Are you guys selling any of that software, or is it open source, or are you keeping it internally?
Yeah, we've actually open sourced some stuff.
Hmm.
My co-founder at Electric, Curtis, is a phenomenal engineer, and we've open sourced actually a lot of stuff. It's sitting up on our GitHub. So there's an Electric Capital GitHub that people can go look for, and there's a bunch of cool stuff that's up open source out there. We also do we share a lot of our data publicly as well. So we do an annual developer report that gets circulated pretty broadly, and just sort of a state of what's happening in the developer ecosystem across various, Ethereum, Polkadot, Binance Smart Chain, Near, like all these
Hmm.
different ecosystems, and who's building what, and so on. Um, and a lot of that data is sitting out on GitHub as well for people to go take advantage of if they want. So we're pretty open about sharing all that kind of stuff.
That's fantastic. Really living the ethos. That's terrific. So you kind of talked a little bit about this, but can you get a little bit more into what does Electric Capital do?
Yeah, so as I mentioned, we're a crypto blockchain focused fund. We take a pretty broad view of what that means, though. Our worldview is that this is, the set of technologies here when you're talking about cryptography and zero knowledge proofs and distributed systems and distributed consensus and digital scarcity, NFTs. All of these things are at the very, very infancy of what they will become. But over the next 20 to 30 years, they are going to eat up everything that has to do with money and moving value around. And so our core thesis, we wrote a paper about this back in 2017 before we started the fund. And then when we closed our first fund, we published it in 2018. Um, and we called it programmable money. And the idea is that if you look at these as a software system, like we don't really, there's kind of this narrative in I think crypto that's really top down, which is like sound money and non-sovereign wealth and fixed
Hmm.
supply and that kind of stuff. And we're self-taught on that. Like we've learned those things over the years. But that's not really our background. We're engineers. And so, we come at it a little bit more bottoms up, which is, well, what are these platforms really about? And in our opinion, what these platforms are really about is just building software differently, and they just make a different set of trade-offs. And
Right.
fundamentally, the set of trade-offs that we make in these distributed systems is instead of optimizing for speed and scalability and throughput, we just optimize for seizure resistance and resilience and privacy and data mutability. We just optimize for the exact opposite set of stuff from the internet.
Right.
And so as a result, this infrastructure, the software stack is just really good for new things that internet software was not that good for.
Hmm.
And so specifically, we think the place where it's a really good fit, like where do you care about privacy and where do you care about seizure resistance and where do you care about data immutability and you're willing to trade off some throughput and scalability and speed. You care about that in the context when you're talking about money and all things that are value exchange. And so we think over the next 20, 30 years, this software stack will eat up fintech, it will eat up um, marketplaces. It's already starting to touch the creator economy with things like NFTs. And so, we think over the next 20 years, it just sort of backs slowly into the internet. And 20 years from now, there aren't really going to be crypto VCs. It'll just be VCs. Like all VCs will need to do this stuff. And the people who will be the best position for it will be the people who are crypto native, like Electric. And so that's kind of our long-term vision. And so we invest in tokens, crypto networks. We invest in applications of things like privacy preserving technologies. We invest in creator economy. We invest in marketplaces. We invest in picks and shovels businesses. And so we kind of invest up and down the stack and kind of across all of those.
Awesome. It's interesting to hear you talk about the trade-offs that uh, developers have to make building on blockchain systems, because Tor Bear actually just mentioned that on a recent episode of the podcast in conversation with Alex, and and about how exactly that. But they were talking about it in the sense of relying on Intel's SGX secure enclave hardware for the trusted execution environment versus building secret network in a completely different way that would try to avoid that sort of thing, and the trade-offs that came with that, and uh, kind of recognizing, at least from Tor's perspective, that some of those ideals, will hopefully be ready in the future. I think zero knowledge proofs, that sort of thing,
Yeah.
whereas at least at the time they were building, Intel TEE or any sort of TEE was ready to go. So that's
Yeah.
interesting.
Yeah.
Um,
It's one of the easier things, honestly, about being an investor versus a founder. I mean, my co-founder and I, before we started Electric, we had started and sold two companies. Um, and with a founder, your bet is so concentrated. So like, I think this thing is going to happen in the world. And as an investor, we have the luxury of having a portfolio. And so a lot of these things that you're talking about, like, is the right way that this thing will manifest via some sort of zero knowledge proof or through trusted execution environments and SGX.
yeah,
We get sort of the luxury of being able to invest in things that are kind of both, right? So we can invest when you're talking about something like that. You can invest in Ironfish, you can invest in MobileCoin, you can invest in Oasis, you can invest in Coda. Like you can kind of, or what's called Mina now, Mina Protocol. And so
hmm
we got kind of get to build a portfolio across all of these. So it's a little. We have our job is easier than the founder's job, because not only do we not have to build it, but we kind of only have to, like, we only have to be right 1 out of 5 times, right? We don't have to be right all
right.
the time.
You mentioned a couple of the companies in your portfolio there. Can you expand on any of those ones that are working on specifically privacy preserving technologies or um, encryption, decryption, that sort of thing?
Yeah, we it's an area we like. It's kind of interesting and it's polarizing, I think, in a lot of ways. I think there's definitely a worldview that a lot of these privacy preserving technologies is sort of the average person doesn't really care about this stuff.
Hmm.
And I think historically that's been true. The average person hasn't really demonstrated that they care about their privacy deeply relative to the alternatives. Um, I tend to think that when you're talking about money, the right way to look at the metrics is not number of users, but it is dollar weighted. And so when you're talking about dollars moving, I would assert that most dollars in the world do care about privacy.
Right.
And arguably, the more money you have, like if you're a bank or a business, the more money you have, the more you actually care about privacy. Like, a business does not want all of its transactions broadcast for all of its competitors to see. That just makes no sense.
100%.
So I think, in a programmable money context, I think privacy is disproportionately important. But I also think the norms around privacy are starting to change. You saw this recently with like the WhatsApp to Signal sort of debacle that happened, where WhatsApp didn't really communicate their terms of service changes clearly. People were
Yeah.
upset about it. They thought their data was gonna be handed over in certain ways. Um, and it sounded like it was mostly a miscommunication, and so Signal downloads started to spike. I think they went up like 4,000%. It was like
Telegram
for
too.
a couple
Yeah.
of weeks. Yeah, Telegram too, and so I think people are far more acutely aware in 2020 of what it means to have privacy than even 10 or 15 years ago. And so
Hmm.
it might actually be time. Like people might actually be ready for things that are privacy first. And I think the thing that's changed, I think Signal starts to show. I think they could do better, obviously, but I think they've done a phenomenal job of it already. Is I think there was a window of time where privacy and usability were explicitly a trade-off. Like you could only have one or the other. And I think
Right.
that's really changed. I think in the last 5 years, in part because of the crypto ecosystem creating a profit motive, I think what you have now is the ability for privacy and usability to no longer be a trade-off. And so you're starting to see, I think, like this next generation wave of privacy first or privacy sensitive or privacy aware products coming to market where you don't have to have that kind of trade-off anymore. Another good example is there's a product. There's a protocol they just launched. Well, I mean, MobileCoin is a great example, right? Like MobileCoin is going to be inside Signal, and
Hmm.
they just announced like
Testing in the
Signal in the
UK
UK.
now.
Yeah, exactly.
Yeah.
Signal's testing it in the UK. Um, and so now you could have private digital cash inside Signal, which I think is amazing, and very still underappreciated. I mean, it's pretty remarkable that both Facebook and Telegram tried to do this, and Signal was able to pull it off with MobileCoin.
Hmm.
It's pretty remarkable. But there's another project that just launched a couple days ago called Ironfish, which is a new proof of work private privacy aware cryptocurrency platform, which will be useful for other types of digital assets. But it's sort of a very different approach than something like MobileCoin to try to build private digital cash. Um, and also very early days, but similar sort of mentality or similar ethos that privacy and usability don't need to be trade-offs anymore. Like actually, you can have both.
Right.
And so we're really excited about that fundamental change on the consumer side, where actually they may not need to be the trade-off that they used to be 10 years ago. And so maybe privacy tech can actually go mainstream. But even if it doesn't, we still sort of firmly hold that in a money context, private money is very, very valuable. And so these technologies will get used for that. And so that's where things like Oasis, MobileCoin, Mina protocol, like the applications of this stuff to try to get you private compute, private computation, private contracts, private money movement, like all of those things we think are going to be really important for industries and businesses.
Cool. That's really interesting. Clearly, privacy as a general broad term has been part of your investment portfolio up to this point. Is that the main goal, or are there other impacts that
Yeah.
you'd like to have with electric capital?
Yeah, we actually it's funny, we don't look at it through that lens exactly. It's actually a relatively small percentage of our portfolio. I mean, most of
Okay.
our investments are really skewed towards companies like Bitwise, which builds index funds for crypto, or companies like Anchorage or which is a custodian for crypto. Like
Hmm.
those are the kinds of companies that we generally spend most of our time thinking about. Um, and some like DeFi protocols. We spend a lot of our time on DeFi, and so that's really where we spend the bulk of our time. The way we think of the privacy is less about it being privacy first, or thinking about it through the lens of privacy. It's just where does it actually make sense to have privacy? Like where are there actually users and use cases that would value this? So we try to come at
Hmm.
it from a user lens. Is like, are there people in the world that want this feature set? And if there are, can we work backwards to the technology being useful?
Right.
Rather than I think this is very common. I think because privacy is such a philosophically motivating thing for so many people. They want to lead with that, and I think that's a little bit of a mistake. I think you want to sort of end up there. I think you want to start with, are there users in the world that want this stuff, and who are those people, and what do they want, and then work backwards to, oh, and therefore it makes sense to build this using this privacy tech in this way.
Okay.
Um,
Cool.
and so that's kind of the lens on it. So we just think it's sort of the intersection of, there are people who have real needs, like businesses, healthcare companies, banks, that want privacy preserving technologies, and the technologies are now getting good enough they're actually usable, and that intersection sort of creates an interesting investment opportunity.
Right. So I think it brings me back to the original question. So, like, over the long term, what kind of impact do you hope
Hmm.
electric capital will have? Maybe I know it's hard to predict this
Yeah,
because Lord knows humans are terrible at
yeah,
predicting, the
yeah.
future in general. But in the next, let's say, 3 to 5 years, what sort of impact do you hope either stuff you've built or companies you've invested in will have?
Yeah. I hope we're able to actually just be part of this transformation that's happening. I mean, I think we're
Mhm.
going through such a massive, massive shift as everybody moves to these decentralized systems, that I hope we're able to help be some small part of helping these founders be successful and build these more transparent systems. Like, I think that from a philosophical perspective, the thing that really appeals to us is the idea that we can reimagine a lot of these trusted intermediaries, starting with things like banks or payment institutions or financial institutions, but eventually even getting to reimagining what does the internet look like, and what do the future social media platforms or the future shopping platforms, or all the things that have become so centralized on the internet, can we reimagine them in more transparent, more auditable, more honest, more fair ways? And that will take a long time, and for us to be able to be a small part of it and help the founders that are sort of doing all the hard work day to day, and be supportive and give them advice and things that we're experts at. That to us would be very rewarding. It'd be very fulfilling to sort of be along for the ride, close enough to have had some small influence on how it turns out, um, But I think at the end of the day, it's really the founders and the people who are writing code, the people who are in the trenches like day to day that really should get all the credit for it. And so for us, it's a total luxury to be able to hang out with great founders and talk about these ideas and try to help them in some small way in terms of actually making it happen. And if we get a couple of those, you kind of as an investor, you kind of only have to be right once or twice,
Right.
in terms of it having a really, really big outcome. Um, but yeah, if we can create sort of a community of people that want to do the right things, and a couple of those people end up being just really, really successful, I think we'll have had a great impact over the next 10 years. And some of those, I hope at least one of those is a great company, and I hope at least one of those is a durable protocol that's still around in 30 years.
Cool. So, really, interesting take on the what kind of impact you want to have. I agree. Working here with Orchid and teams I've worked with in the past, that's more or less what I want. Like I just, this is for me, this is almost like an opportunity to replace the opportunity I didn't have being in San Francisco in the early 2000s. I was too young at the time anyway, but I saw that take off, and for me, this is almost like that moment where I get to jump in, have an impact. Maybe I'll make a name for myself. I really don't care though. It's this is for me a lot of philosophical importance. Um, you mentioned earlier about how a lot of the technologies or not having to make that trade-off anymore, at least not as often, between decentralization and the user experience. I wouldn't say that's all been solved, but it's certainly much better than it was in late 2017, let's say, or early 2018. So maybe that's still the largest hindrance to making a lot of this happen. If so, just say so, and we can probably move on. But if it's not it, what do you think is the biggest problem hindering real proper mainstream adoption?
Yeah, I agree. I think it's usability. I mean, I think we've crossed over the threshold of basic usability. Like it's actually you can
Hmm.
kind of do all the stuff that you want to do, but it is very reminiscent of like 90s internet. I was a little too young for that too, but like I've gone back and looked at like videos of like Mark Andreessen when he built Netscape, and
Yeah.
literally what they had to do is you have these command lines and you type out the commands that you wanted, and you're downloading images and putting them into a place, then you pipe them to another place, and then you open up the utility to render the HTML and the images in line, so it can, and all of those command line and pipes just sort of turn into push a button on Netscape. And
Hmm.
so I think we're just starting to get there. Coinbase in my mind is sort of the Netscape moment. And so the IPO, I think, will get everybody to pay attention. And so what I hope happens over the next 5 to 10 years is we really start to invest in the usability of these things, because they are
Hmm.
baseline just barely usable, which is why people are even here. But they're not usable such that your average internet user would choose to use these things quite yet. And I think we'll get there. We are seeing people who realize that that's the opportunity. And so I think there are, for example, protocols like Near protocol, and Near really focuses in on this as both the developer experience, but the end user experience. Like how do you build something
Hmm.
that the end user can use, and when they use it, it doesn't feel to them that it's a Web3 application. It just feels like a Web2 application to them. That's how
Yeah.
seamless and fast it should feel. Or there are new teams. Uh, like Phantom that's building sort of an Ethereum Solana wallet, and the designer behind it used to work at Facebook. He was one of the best designers at Facebook,
Hmm.
and so the sort of caliber of people that are coming in now, the design talent, the product talent that's coming in, I think is really really stepped up in the last few years in particular. And we need a lot more of those kinds of people to come in to really take the usability of these things to the next level.
Cool. Is that the Phantom, like Phantom, the Andre Cronje associated
No, different one
Phantom?
with a
Okay. Okay,
PH.
different
Yeah,
Phantom.
yeah, yeah, different one. Yeah. Yeah, it's funny. Like crypto
We're
has
running
like
out
the
of
same.
names.
Yeah, we're like running out of names. It's like everybody, like how many projects named Beam do you know, right? It's just everybody uses the same. I know not against anybody naming the project Beam. It's just like we run out of names. So
Yeah, yeah. Well, it's like BEEM,
yeah,
BEAM, just
different
start running through
prefixes.
different
Yeah,
vowels.
yeah, that's right.
No, that's cool. I agree. I've used Near Protocol a little bit. I love it. I think the wallet browser, or you're just being able to just sign in
Yeah.
and have your session persist,
Yeah.
it's probably HTML5 storage or something like that. I haven't looked into to how they're making that happen, but that is a very familiar experience for my dad or my in-laws or what
Yeah.
have you, and much easier than they're going to need a password manager anyway of some kind
Yeah.
realistically, but it's much better than having to download an extension, go through that setup process, make sure you don't lose that passphrase,
Yeah.
and then even with something like MetaMask, you have the password you need to enter anytime you log out, basically anytime you close the browser, or like every week or so. And I'm willing to jump through those hoops, but certainly if we're
I
going to go anything above 60, 65 year olds, um,
Yeah.
it's yeah, it needs to be easier.
Yeah.
So
Yeah.
that's
Yeah.
a good point. You've mentioned this term a couple times. I have a hunch Electric Capital might have coined it. I'm not going to promise that, but you guys used it really early on in, I think, an investor letter back in 2018. Programmable money. How do you, or how does Electric Capital define that term?
Yeah, great question. Yeah, we might have been one of the first. I don't know if we coined it either. We were throwing it around in 2017, and so yeah, it's probably one of these things that multiple people converged on around the same time. So I won't take credit for it, but it's become much more common now. Um,
Yeah.
our take on it, well, the history of it, sort of the genesis of it, is the sort of insight that what's really happened here is we have now, as we, meaning everybody in the crypto ecosystem, has basically said, I'm willing to take fiat money. I'm willing to take dollars and euros and things that I can go to the store and buy goods and services with. I'm willing to take those fiat currencies, and I will give them to you in exchange for some ones and zeros. Like, give me some ones and zeros. Those things now have value to me,
Yeah.
which is kind of a mind-blowing thing. That as a society, we all decided that ones and zeros inside a computer have value. And you play that forward a little bit and you say, okay, well, what is that? What are the implications of that? Well, that's a phenomenal thing that now people are willing to buy ones and zeros. But then you say, okay, well, how do you actually like own the ones and zeros? And you realize, well, what it really means is you have this private key, and the cryptography lets you assert that you're the only person that can modify this thing and move it and
Mhm.
manipulate it. And you say, okay, that's interesting. And so the thing that asserts ownership is a private key, which is itself a set of ones and zeros. It's just bits inside a computer. And then you say, well, couldn't didn't that private key get generated by some piece of code? Like, didn't the wallet software, or wasn't a key generated somehow? And the answer obviously is yes. And so you say, wait a second. So a piece of code generated ones and zeros, which asserts that I own ones and zeros. Couldn't that piece of code just keep the password? Couldn't it not tell me the password? And it knows the password and I don't. And obviously the answer is yes, because code can just do whatever it wants. You can just program the code to create the wallet and create the private key and not tell you that. And then you
Yeah.
then you sort of very quickly reason to, wait a second, doesn't that mean that the computer owns the money? And the answer is yes. Actually, what that means is that the software owns the money. And so all of a sudden, what you have now is software can own money, software can manipulate money, software can control money. Money is actually ones and zeros. Like, money is now software. These two worlds have now blended and become one. And
Right.
the really unique property of software is you can program it, right? You can control it and tell it to do what you can give it a set of instructions, and then those instructions will be executed on some future time horizon. And so literally now, because money and code are the same thing, you can program money. And it's almost a little bit redundant, right? You're just saying, like, it's like saying I can program code. It's like, well, that's redundant because money is now code. And so you can just
Right.
program money. And so what that means is you can put rules around it. You can say who can access it. You can say only certain people can access it. You can say on some future time horizon, please do a certain set of things. Please move money to this person. Please, restrict access. Please take fees in this way. And you can do that natively on the money itself. And in our opinion, when you look at a lot of the world, literally hundreds of trillions of dollars of the world, it's basically, here's a pile of money, here's a bunch of rules around that money, here's who can access that money, here's on some future time horizon, please execute these instructions, do these things with it. And
Mhm.
that's wills and trusts and escrow and REITs and HELOCs and mortgages and derivatives and securities. And it's literally $500 trillion of the world. It's just that. It's a pile of money and a bunch of rules. You just, instead of programming it in legal code, now we can program it in computer code. And so to us, it's just natural that all of this stuff gets eaten up. And so to us, anything that touches money is already programmed. It's just programmed in the analog world. It's not programmed in the digital world. And so now we're going to start programming
Right.
that money in the digital world. And that whole universe of opportunities we call programmable money.
Which you're not wrong. I definitely agree with what you're saying. What strikes me as not funny, but maybe a natural extension of what I guess banks have been doing for a
Yeah,
while, in the sense that at least here in Canada, we have this really robust system called Interac.
yeah,
You guys have something similar now in the US. The name is escaping me,
yeah,
but like the banks own this company, or at least the big banks do.
yeah,
A lot of other Canadian banks can plug into it
yeah,
and use it. And I can literally email people money.
yeah,
I've been able to do this for years.
yeah,
That $500 or whatever is not getting shipped
yeah,
from London, Ontario to
totally.
Vancouver.
Yeah,
Like
yeah,
it is completely a digital representation. There's probably a paper money of some kind to to back it and represent it.
yeah,
Um, but it's not moving.
yeah,
I'm literally emailing somebody money and it
yeah,
just shows up in their account.
yeah,
Um, so for people who listen to something like this, or like hear about Bitcoin or Ethereum for the first time, this is not really unheard of. It's just it's the lack of a physical piece of polymer or paper or whatever that you can withdraw from the bank, hopefully on a good day, unless you live in Greece and the government's decided to take 10% off of your off the top of your account
yeah,
because there's a liquidity crisis or something like that,
yeah,
and hand it to somebody else in another physical way.
yeah.
Um,
Well, I think
but
there are three. I
we've
think there are
been
three. I mean, that's an amazing system, by the way, and in a place like Canada,
thanks.
it's I wish we had. I think there's like Zelle, there's like ACH. People have built sort of
That's the one,
yeah,
Zelle.
people have kind of like
Yes.
hacked systems like this in the U.S. too. Um, Hacked meaning they sort of pieced them together. I think there are
Correct.
three
Yeah.
critical differences between kind of the system that you described and kind of the crypto universe. So one, um, who do you have to trust in that system? And in the
Hmm.
system that you're describing, you still have to trust the banks. You still have to trust your local government. You still have to trust, the IOU, which is backed by the government, and
Hmm.
that obviously works. And I think can coexist with a different system where you just trust the math and you trust the code. And we sort of have collective distributed trust in the protocol. And that is a pretty meaningful difference because now you're not relying on a human system, right? You're relying on a mathematical system. And that's a pretty fundamental
Yeah.
difference. Two, I think there's a notion of crypto being a bearer instrument rather than a representation of value. So, in the system you're describing, what you do have databases that have these ones and zeros, but those are representations of value. They're not the actual value itself. And
Right.
by making it a bearer instrument and allowing computers to own the money, you really change like the programmability of it. Um, and so it's not just a representation of money, it is the actual money. So it means something meaningfully different to say I have given money to a computer and now I can't take it back
Hmm.
because
Hmm.
it's the computer's money. It's the piece of software owns the money now. The third thing
Right.
is I think the openness of the systems is really, really different. And I tend to believe that open systems will beat closed systems given enough time. And the sort of canonical example, obviously you could point at the internet, but I think Wikipedia is a great example. Like if you were in school in the year 2005 or something, uh, and you cited Wikipedia, your teacher or your professor might look at you and say, that's not a valid source. Like, go find the real source. And today,
Right. Right.
Wikipedia is actually the de facto source for all this stuff. It's actually it has lower error rates than Encyclopedia Britannica, and that's part of why Britannica sort of didn't work as a business and fell
Hmm.
apart in the last decade. And so I suspect a similar thing happens here. Because it's an open system, it's amazing that you can now send email and have money move. I would argue that it would have been great to do that like 15 years ago. We've had email for 30 years. Email was the first application
Yeah.
on the internet. Like why
Also an
only?
open system.
Yeah, also an open system, right? And so the rate of innovation in open systems is much, much better. And so while it is amazing that you can do that in Canada, in a lot of the world you can't do that. But part of the reason it's taken so long is these systems have been closed. And by having
Hmm.
these systems now be open, initially where we are today, these systems are very brittle, they're very risky. Everybody should do their own research. Like this is not financial advice, obviously. Um, but and you could lose a lot of money, and we have seen hacks where people have lost money. But I would posit that if we were to look back in 10 years, even though the Canadian system that lets you move money around via email has a head start today, in 10 years it's going to be eclipsed, it's just going to look so antiquated compared to what's possible in crypto. I mean, even already, it's already antiquated relative to what's possible in the crypto ecosystem, but I think we'll
Sure.
have general broad acceptance of that. So I mean, it's a great question. We hear this all the time. I think, a lot of people who are not crypto native ask exactly this question of like, well, can't I already do this and so on. But I think the fact that you don't have to rely on a trusted intermediary, the fact that it's a bearer instrument, which means computers can own money, and the fact that it's an open system, so anybody can contribute, are really, really big game changers. May not be obvious today, but I suspect in 5 to 10 years, it's going to be exceedingly obvious to everybody that those are pretty fundamental game changers.
I agree, and I wasn't trying
No, no,
to
I
say
know.
otherwise, just
Yeah,
in
no, I
case.
agree.
I think you got that, but for
Totally.
anybody listening
Yeah, yeah.
or
No, no.
watching, yeah, I don't
Totally.
disagree. I'm just saying, I guess the point I'm trying to make is we're kind of just making that next natural
That's right.
extension. We've been relying on the banks. You're
Yeah,
absolutely right.
yeah,
It's unlikely, but RBC Royal Bank, which is like Canada's largest or second largest bank, could be implicated in another subprime
yeah,
mortgage issue or something like that, and it's gone.
yeah,
Hopefully that doesn't happen,
yeah,
but but that sort of thing can happen. We've seen it happen. We
yeah,
saw massive businesses who lots of thousands and thousands, maybe millions of people trusted
yeah,
with their money fail overnight.
totally.
And
Yeah,
I'd rather put my trust, what little I put, into some really, really smart people building a smart contract that can be audited, rather than this database that I don't know who sees it. I don't know who has
yeah,
the private password, the super admin password to it. Um,
yeah,
Probably somewhere in Toronto or maybe
yeah,
New York. And relying on them not to go in and mess with things.
yeah.
I'm sure there's a lot more protections
There's
around
plenty
it,
of
but that's the
controls,
point.
and I would argue. I mean, two thoughts too. I mean, for you and I, we're very fortunate that we live in Canada or the United States, or
Hmm.
places like Singapore, and in these systems, the systems by and large work, and so people should trust them. I mean, like it's pretty reasonable to trust these systems. Now, it doesn't mean you should have blind faith. It doesn't mean you shouldn't think about having an insurance policy. Um, like the way Chamath puts it, Bitcoin is just schmuck insurance, right? You just buy some insurance just in case, right? And but it's a total luxury for us to even think of it that way. Whereas in a lot
Yeah.
of the world, most of the world, I would argue, their systems do not operate like the American or the Canadian system. They're actually pretty broken. Like the government has
Yeah.
really fundamental challenges. And in many parts of the world, if you're an adult, let's say you're 40, you might have lived through two currency crises in your lifetime, which is pretty remarkable. That basically every 20 years the currency just collapses in some form, and you have
Yeah.
basically a fundamental crisis. And
Argentina,
Argentina,
Turkey.
Turkey, Chile, Lebanon, like this happens every 20 years. And so,
Yeah.
um, I mean, even in places like Nigeria and India, like you have sort of this like slow erosion that happens through inflation. And when you have 6 to 8 to 10% inflation a year, you're just eroding people's savings, and you wake up one day and your
Yeah.
purchasing power is significantly reduced, and houses cost more than you can afford, and it creates all sorts of downstream challenges. And so in those environments, um, having an alternative is a pretty phenomenal thing. Like having an alternative where you can say, oh, yeah, I have enough trust that maybe my system will work, but I would like some alternative just in case, is more than a luxury, right? It's a necessity in a lot of the world. Um, and so, I think even just that base layer, I think offers so much value to so much of the world. And it's hard, I think, for people. I mean, these are the conversations I often have with like, institutional investors in the US when they're like, well, who really needs this stuff? Like the current system works really well. And of course, the conversation is, well, it kind of works well for you and me, but it doesn't necessarily work well for everybody else in the world.
Yeah, that's definitely the sentiment I typically have with people. Is my parents say the same thing. Well, what's wrong with the banks?
Yeah,
For you and I, probably nothing.
yeah,
For our family in Portugal,
yeah.
the credit reporting system is absolutely terrible. It
Oh,
only
really?
reports negatives.
Oh,
Same,
interesting.
I think, France, Spain, like a lot of Southern European countries,
Yeah,
more or less the same. They only report, and Brazil for sure,
yeah,
they only report negatives. So
interesting.
you could pay your cell phone bill for 10 years on time.
Yeah,
You miss one payment, now you got something on your report, which is the exact opposite of what you would want here. You
yeah,
want really, you want more or less all the data, because assuming you're fortunate enough to have a decent paying job or a career of some kind and reasonable bills,
Yeah.
you can actually show I've been paying my bills for the last 3 or 4 years all
Yeah,
the time,
totally.
no problem. Give me
Yeah.
some more credit so I can buy a house. It's literally the exact opposite over there. So,
Yeah.
when I got involved with a project called Bloom a few years ago,
Oh yeah.
that's what I was trying to fix. I
Yeah.
wasn't trying to fix the situation for me. The situation for
Yeah.
me is fine. The situation sucks for the vast majority of my family that still lives in Portugal,
Yeah.
and we have adult conversations now because we're all in our 30s and 40s about cost of living, buying a house, financing a car, etc., and the relative difficulties we have. For the amount of money I make, I could live like a king over there, but they make less, and yet some things, partially because some of them live on the islands, cost relatively more.
Mm.
So yeah, it's you and I, like you said, we're really, really fortunate, but billions of other people are not,
Yeah.
and I think it behooves us to try and level the playing field more or less.
Yeah. Yeah, I agree.
And a lot of these decentralized systems
Yeah.
aim to do that.
I agree. And one thing you just said I thought was really interesting too is on the lending side and the credit score side too. I think reimagining what these things like one of the things that I think is so powerful and interesting about this new world is that we get to start from scratch. We get to say, okay,
Mm,
what if there's no credit system? What if there's no credit
yeah,
monitoring? There's no credit reporting? Like, what would you do? And we'll slowly reinvent all of these building blocks. And right now we're in this era of over collateralization, and you have to put down a lot of capital. And there's no credit scoring because there's no credit history, because there's no identity, because actually, like,
yeah,
how do you build a decentralized, civil resistant identity? Like, there's challenges there. But I think there's also a lot of opportunities because it lets you do things like, well, uh, what if we could reimagine what credit scoring is? What if it's based on if you are, to your point, what if you're a really good actor? What if you're somebody that votes on a bunch of governance proposals in Maker
hmm
and in Saddle and in Compound, and you have had stable wallet addresses, and you have, like, been using DexAG and 1inch, and you're a good actor. That should count for something. Like, we should reward
sure,
that. Or what if I'm willing to vouch for Derek and say, hey, Derek is a good actor. I trust him. I'm willing to vouch for him. And Ave is playing around with some of this kind of stuff. So I think, like, just
yeah,
reimagining all these primitives in a way that works purely natively on the internet and works at global scale, I think is such a huge opportunity. Um,
yeah.
that I'm excited
We have
to
data.
like reimagine all these things too.
Yeah, we have like the data is starting to be, it has there's already years of data for some people,
Yeah,
like you and I, who have been, using a lot of these systems already. I have a wallet that I've been using for several years. I know
that's amazing.
wallet reuse for privacy is not great, but at the same time, I've got all this history now that could actually
Yeah,
benefit a decentralized identity and a credit score type system
yeah,
in a crypto native way. So
yeah,
yeah, pros and cons to everything. Maybe similarly, Electric Capital put out an investor letter
mm,
about the digital renminbi.
yeah,
Basically, what's it called? Central bank digital currencies,
yeah,
CBDCs, or I think you guys also refer to them as digital currencies, electronic payments,
yeah,
DCEPs, in the letter. Talking about the fact that China obviously has a really head start here. They've got multiple regions across the country testing digital renminbi, DMB, I think, or digital RMB, people are calling it, and basically making a case for why the U.S. government needs to do something like within the next couple of months, more or
yeah,
less, and that case for working with some crypto native companies like Circle,
yeah.
who issues USDC, Avanti Bank, who I think they got a charter from Wyoming, if
Yeah, they
I'm
did.
if I'm not mistaken,
Good for them.
and a few
Congratulations to them,
others.
by the way.
Yeah, I'm sure it wasn't easy,
Yeah,
and
it's
there are a
been
few
years in the
others who
making for
are
them.
who are yeah, who are either working on it or have just gotten their charter as well. So good for them.
Yeah,
Um, you lay it all out. It's a long read,
yeah.
but I would encourage anybody to go and find it. And I'll say now we should put that in the show notes. What do you think the biggest barrier, maybe practically speaking, or maybe it's a mental thing? As we've been talking about, what's the biggest barrier to the U.S. government and the crypto ecosystem working together?
Mm, that is a really good question. What is the barrier? I think the biggest barrier is the realization that if you play out the game theory, everybody's interests are actually very well aligned.
Hmm
And by everybody, I mean the U.S. government and the crypto ecosystem's interests are well aligned. Because I think, and maybe caveat on this is not intended as any sort of value judgment. This is, like not an anti-China or Chinese entrepreneur or anything like that. Um, it's actually, I think, if you think about it, quite flattering because I think the Chinese government and Chinese entrepreneurs have been so far ahead of the curve when it comes to understanding the implications of this technology. That's
Hmm.
it's really remarkable how far ahead of the curve they've been relative to the West. And so, what the Chinese government has done and what Chinese fintech companies have done and what Chinese entrepreneurs have done is realize that the ability to move money around quickly is a strategic asset. And actually, rather than trying to build it on top of 1970s infrastructure, a bunch of Fortran code that was written or COBOL code that was written decades ago and trying to patchwork it
Yeah.
together, let's just rebuild it from the ground up. Let's just rebuild it from the base layer up. Um, and so the Chinese government has been working on this central bank digital currency for at least 5 years, and is now testing it and piloting it. And it's gonna be a two-tier system. They're gonna get it out through the commercial banks, and that's how it'll get out to retail, and that's at least where they'll start. Maybe eventually, it gets pushed out to Belt and Road countries as a settlement platform for international trade.
Mm.
And so, they're going to be very smart and strategic about it. And so, if you assume that they are rational and moving fast and good at technology, which they are, obviously, it creates a really interesting question for both the crypto ecosystem and the U.S. government, which is, well, what do you do? And from the U.S. government's perspective, we wrote this paper. We said, okay, well, what is the right course of action? If you are the U.S. government, given this setup, what do you do? And our conclusion was that rather than trying to fight it, rather than trying to say, hey, look, let's shut off crypto, um, very quickly you realize you kind of need to do three things. So the US government, A, needs to get its own house in order and get a central bank digital currency and fix Fedwire and fix the Fed systems and figure out how to turn the dials on M0 and how to get money into the commercial banking system. And all of that infrastructure needs to be updated, right? And so we
Hmm.
should do that. We should invest in that. The problem is that will probably take 7 to 10 years. It's just going to take a long time for us to agree on what to do and how to do it. So it'll take 10
Right.
years. So what do you do in the meantime? If you're the U.S. government, do you just seed, these platforms internationally and say, yeah, Chinese government should just take over, like go everybody else in the world, go do whatever you want on these platforms. That's probably not the right thing to do. And so step two is, well, you say, okay, we should invest in our own infrastructure, but probably step two is you really should embrace stablecoins. You should take USDC and Avanti and um, all these and DAI and all of these stablecoins that now exist and say, you know what? Let's actually make those okay. Let's greenlight them. And in fact, let's try to get them
Hmm.
into as much of the world as possible. And now, as much of the world as possible can be US dollar denominated. And the only requirement is that those dollars need to be sitting in US regulated financial institutions. And so, yes, we actually
Okay.
want $1 trillion worth of USDC out there. We want, Avanti dollars out there. We want all of these things. And we're going to greenlight them and make it really easy for you to get them out there. So, Cello, Near, Facebook's, Novi project, everybody get out there, get all your dollars out there, get them in the hands of everybody in the developing world, because that's really the only way the U.S. government is going to beat the Chinese government to market. Is you're going to have to go through the private organizations and the crypto community to get there. And so you really do want to greenlight that as step two. And I think as sort of part three of the plan, what you really want to do is think about um, how do you do the things that will be economically offensive, right? So you don't want to just play defense, right? It's sort of startup 101 as a VC. You put on your founder hat and you're like, okay, if you're a startup and you're trying to compete, what do you do? What you don't do is try to compete on somebody else's terms. You don't try to do what they're doing and try to compete that way. What you try to do is compete on the dimensions on which your opponent is structurally unable to compete. And so
Right.
if you apply that lens here, what the U.S. needs to do, the U.S. government should be doing, and the Chinese government is going to do the same thing, by the way, right? They're going to run the same thought process. Is
I'm sure they are.
what are we willing to do that the U.S. government is not willing to do? And so what the U.S. government should do in that thought exercise is say, well, what can we do that the Chinese government would not be willing to do? And in our opinion, that's things like embracing privacy or embracing, seizure resistant due process, and
Hmm.
saying, you know what, those are fundamental values, and so we're not going to violate people's privacy. And in fact, we're okay with things like privacy preserving technologies, and we're going to push those out into the world. We're going to push private cryptocurrencies out into the world. And by doing that, you're actually sort of going on the offense now, because those are likely things that the Chinese government will never be okay with, given their sort of the way that they need to conduct business and sort of their
Yeah.
structural setup. And so that's kind of prong three. And so we lay out in this, what exactly the U.S. government needs to do. And today, to your question, like why are the U.S. government and crypto not exactly on the same page? And I think it's because not everybody has come to realize that these two ecosystems need each other to be successful. Like I don't think the U.S. government can succeed against the Chinese government's digital CBDC projects without fully embracing crypto stable coins, the crypto dollar, and without embracing the privacy preserving technologies and so those parts of the crypto ecosystem. And vice versa, I think if the crypto community doesn't try to educate regulators and lawmakers into why crypto is actually additive to the US ecosystem and why all this innovation can take place and how we help the unbanked and how we can build a more fair and transparent and more auditable system. If we don't do that education, then the US government is never going to greenlight this stuff. And if they don't greenlight it, we're going to end up in this sort of no man's land where we are right now, which is like, well, how do I do my taxes, right? Like, what is actually, how do I recognize staking rewards?
Yeah.
How do I, like, is that DeFi thing a transaction? How do I recognize that tax? It's just a nightmare. And we're just losing ground and losing time by not doing that education work. And so we've come to the conclusion that actually these two sides sort of need to communicate more. And if they communicate more, you don't actually have to cede any of your principles. You don't have to stop doing the things you're doing. You just have to realize that actually everybody's incentives are 100% aligned in this case.
Yeah, I'm going to say something. You don't need to comment if you don't want to. But I would say part of what the Chinese government has been willing to do, let's say over the last 20 years or so, is basically just hand people money.
Yeah.
But with so many strings attached, like building ports across Africa and Southeast Asia. But when that country can't pay the bill, can't pay the interest on the loan it took to build the port, they literally take over the port and have a Chinese, owned company, probably a Chinese government-owned company, a state-owned company, actually run it, and now are realizing all the revenue. It's an incredibly aggressive form of, you might call it diplomacy. I don't know that I would call it that, but certainly, it's certainly part of the Belt and Road Initiative, and I think that's a really smart but ruthless strategic decision they made a couple of decades ago now, and certainly paying off because we end up with Canadian politicians, American politicians, European politicians freaking out, basically over that very thing, and the fact that Chinese companies have, state-owned companies, mostly have either major ownership stakes in American ports or outright own some really strategic locations all over the world at this point. So yeah, to your point of, what is the American government willing to do that the Chinese government isn't willing to do? A privacy preserving approach, maybe not even just green lighting, but helping fund research into zero knowledge snarks and zero knowledge proofs and something like Secret Network or even better trusted execution environments and that sort of thing would actually would benefit that hugely and largely, at least, align with American values, to put it that way. So that's certainly a really interesting approach. On that education angle, and I'm not trying to put you on the spot or say you need to be doing this, but we have organizations like Coin Center who are, I don't know if about leading the charge, but certainly are essentially a lobbying firm, trying to educate certainly American politicians on this. Are you part of that, or have you donated to them, or is Electric Capital maybe as a firm helping in any way in that regard?
Yes, by the time this podcast comes out, we should be official supporters of Coin Center. We love those guys. We are big fans of the work that they do. We also do a bunch of independent work on our own to sort of educate people around the world. We work with and anybody that's willing to listen and have a productive conversation. From anywhere in the world, we would love to have that conversation because again, this is not about, for us, this is not about a particular country. This is not about US or EU or China. For us, this is about, how do you empower individuals? How do you allow these tools for innovation to spread? How do you create value bottoms up? How do you empower developers to be creative? And that can happen anywhere, and it should happen everywhere in the world. And so when we come across any legislator, any regulator, anybody in any part of the government that is interested in learning more, we try to go out of our way to actually do that education. So we actually spend, on any given week, I probably am spending like half a day a week doing that kind of work. behind the scenes, and we purposely do it outside the bounds of like a lobbying organization because we don't want it to
Hmm.
come across as a it's very important work. So this is not intended against the Coin Center thing. I think they do fantastic work, and obviously we're supporters, and so we love the work they're doing. But I think um, there's a different perspective here too, which is like it's not about us making money. It is actually legitimately about what are your philosophical principles in the world, and we just want to make sure that everybody's being well educated on those things. Um, and so when we approach these people, we very much try to take it from the perspective of it's not about our portfolio, it's not about our book, we're not talking our book. What we want to do is like understand where you're coming from and help you
Hmm.
understand the technology. And if we can help you understand the technology, hopefully you will very quickly see why it is impactful for you and your country and your constituents and your agency and so on. And almost always when we've been able to have those conversations in a productive way, very quickly people realize why these systems can be better and they can be more transparent, they can be auditable, they can be more secure, you can have more innovation, the innovation can be more participatory. Like you get all these good things, and as soon as people get their heads around the technology, they get that. And so that's kind of the lens we take is let's set aside the lobbying piece of it too. Let's just go
Yeah,
educate people about what the technology is capable of, and then very quickly these people are smart and they'll get it.
that's awesome. I'll end with this question: what hasn't been built yet, or maybe what isn't mature yet that you still want to see get built in this crypto native decentralized ecosystem?
Oh man, so much stuff. I think
Let's
uh,
pick one.
yeah, like everything basically. I still think we're at the bottom of the S curve. I don't think we're just starting to hit that inflection point and go up the S curve. Two or three areas that might be worth highlighting that we're getting increasingly excited about. We've spent a lot of time thinking obviously about programmable money, which touches on DeFi, and we're early investors in a number of DeFi projects. Um, but we're increasingly excited about things like NFTs. NFT is a catch-all term, but the idea that you have creator tools where creators are modern small businesses and they run their business entirely online, and the idea that a creator could now have a direct relationship with their fans and monetize those relationships directly. It goes back to Kevin Kelly, who's the editor of Wired. Um, his insight that you have 1,000 true fans, and if you can have a
Yeah.
deep relationship with them, you might actually be able to have a meaningful business. And I think that's going to be transformative in the world, and that's going to take a lot of forms, and crypto enables that. Similarly, I think developer tools are going to go through a similar transformation. Like the internet was really built on open source tools, and now we have a
Right.
monetization model for open source. Um, and so I think that's going to be transformative for all sorts of developer tools and empowering small groups of developers anywhere in the world to capture a lot of value. And by being able to capture more value, they'll actually be able to create more value because you'll have sustainable models now. We're really intrigued by decentralized infrastructure. We still think it's really early. So things like Arweave, Siacoin, the Graph, Filecoin, you're starting to see that emerge. HNS, distributed DNS. All these things are fundamental primitives to reimagine the internet as a whole. We don't think we're quite there yet. We're not where, DeFi is today, where it's sort of going up that S curve and you can see, the TVL going up. We think we might
Right.
be in that ecosystem. We might be somewhere like 2016 DeFi. Like it's going to take a couple of years, but it's around the corner, and you can kind of see that it's
Hmm.
about to happen. We're really optimistic about that because once that happens, plus all of the creators being here, and all the musicians being here, and all the developers being here, we think you just get this explosion of creativity on the other side of that. When all of the tooling is in place, 3 to 5 years from now, we think it's just going to explode. You're going to get a Cambrian explosion of businesses being built here. And all of a sudden people will say, well, why would I even build it on the internet? I should just build it on this other place
Yeah.
where I can't get shut down. And that is going to be, it's going to be, I think, truly transformative. I think we're maybe 3 to 5 years out from that.
Awesome. Thanks so much. I agree. I think the thing I like the most about NFTs is the ability to tie that creator royalty back to it. Because decades ago, and up until fairly recently, an artist who kind of takes off, and all their pieces all of a sudden are worth a lot, get nothing on the back end. And for something they sold for maybe a few $100s
Yeah.
or maybe even a couple thousand, if
Yeah.
it all of a sudden sells for 100 grand or a couple million, unless there's some relationship there,
Yeah.
they're probably cut out of the equation
Yeah.
entirely. So whereas you can keep yourself in there, and it's 10 or 15 or 20%, it's fairly marginal, I would say, and yet it can be really meaningful
Oh
to
yeah.
to
It can be life
sell
changing.
something for $100, get the majority of that $100. The first time
Yeah.
somebody sells it for 20 grand, you get $2,000 back. Like
Amazing.
I think that's really important, especially depending on where
Totally.
that artist is,
100%.
in their age, where they live, their cost of living and all that. So
Yeah. 100%
terrific.
agree.
Avichal, thanks so much. I know you've got to get going. So thanks so much for spending this time with me today. And for all the Priv8 Podcast listeners, thanks so much for listening. Have a great weekend.